Now, in this video, we'll discuss about specific deductions under section 36. Now, everybody of you know the accounting P&L account, correct? Where credit side, we write all the incomes and debit side, we deduct all the expenditures to get the net profit. Similarly, in income tax, we write section 28 and 41 as incomes. From that, we'll deduct deductions under section 30 to 37. In that, the most exhaustive list of items where lot of deductions are given or listed is section 36. Okay, so this section is the important section for you, right? So remember, now what are the items given in section 36? Only that items are deductible under this section. Okay, so it is basically a complete list which they give, and only this list items can be deductible under section 36. This way you understand, that's it. Now let's continue with the story. First part is insurance on stock. So you are a businessman, you maintain stock. Suppose in the stock suddenly fire accident happens and the whole stock is burnt by fire. So for you as a businessman, it is a heavy loss, correct? You may think that let me take the insurance so that if any such type of contingency happens, any such type of problem is created, I will be protected. I'll be able to claim insurance compensation. And what you do is you do insurance of the stock. Now, for that, you pay a premium. We call it as insurance premium. That insurance premium is allowed as deduction. Now, how it is allowed as deduction? They simply said on actual payment basis. What does this actually paid means? Here, when we talk about actual payment, it is either paid or due. Okay, either paid or due. So basically, let me tell you, suppose there are two heads of income. One is profits and gains of business or profession, and second one is income from other sources. For these two heads of income, your method of accounting is very important. We discussed in income definition in the first chapter, right? Method of accounting is important. Suppose example, you follow cash basis of accounting. Then this insurance premium will be deducted only if actually paid. But if you follow due basis of accounting, mercantile basis of accounting, then this will be allowed as deduction even if it is due. Okay, so first item clear to all of you. What is it? Insurance premium on stocks, stores, raw materials. Is it allowed? The answer is yes. It is allowed as deduction. Okay, come to the second point. Insurance on cattle. Now you may think, sir, cattle, who will do insurance, sir? We think in a restricted way because we only think about software companies, right? Accounting, finance companies. But there are many other businesses in India. Have you heard of one very famous slogan? Amul, the taste of India. Yes or no? Now, there are lakhs of cows, right, maintained by farmers, and they all give milk, and all that milk is accumulated and sold as Amul milk. Basically, it is a cooperative society. It is not a company. Okay. Now, think of if Amul as an organization or a cooperative society takes an insurance of all these cattle maintained by the farmers, then the insurance premium which Amul pays is allowed as deduction for Amul. Now, what happens because of this is, if suppose the cattle dies, the Amul company will claim compensation from insurance company and pay to the farmer so that the farmer can buy one more cattle. This way, the supply of milk continues and the farmer's income is also protected. Okay. So basically, when insurance premium is paid by any federal milk cooperative society or any other cooperative society on the insurance of cattle, that is allowed as deduction. Okay. Second point clear to all of you. Come to the third one. Now, third one talks about insurance premium on the health of employees. Now, please remember, there is something called as life insurance, that is different. Health insurance is different. So, when we are talking about here, it is health insurance. Okay. Health insurance from where the employer took? From the General Insurance Corporation, which is approved by the Government of India. From whom they took? General Insurance Corporation, approved by Government of India. Or any other insurer. It may be SBI health insurance, it may be HDFC health insurance, any other insurer, but approved by IRDA, Insurance Regulatory Development Authority. IRDA stands for Insurance Regulatory Development Authority. Now, the only condition is, if it is insurance premium on health of employees, it is allowed only on payment basis. If it is due, it is not allowed. And that too, the payment should be through account payee check. There is no 10,000 limit also here, right? So if it is up to 10,000 in cash, it is allowed. No such rule. Even a single rupee insurance premium should be through account payee check. Then only the company can claim deduction. Come on, are you able to understand? We are talking about insurance on the health of employees. Who is paying the money? The company. How? If it is through account pay check or through a proper banking channel like UPI, NEFT, RTGS, IMPS, okay, right? Then definitely they will get the deduction. But if insurance company pays the money, the company pays the money of insurance premium in cash or through bearer check, right? Then it is not allowed as deduction, right? There is no monetary limit also. Any single rupee paid in cash or bearer check, not allowed at all. Entire payment should be through account pay check, demand draft, or through NEFT, RTGS, UPI. Then it is allowed as deduction. Okay, clear to all of you? Fourth one is bonus and commission. What is bonus? A part of the profit distributed to the employees is bonus. What I said, part of the profit distributed to employees is bonus. Is it allowed as deduction? The answer is yes. Commission, sometimes on sales, commission is also paid. Is it allowed as deduction? Yes. But when the point is, it should be paid before the due date mentioned in the respective law. So, new wages code is there, which covers bonus now. So, as per that code, whatever due date is there, the bonus should be paid within that time limit. Commission should be paid before filing income tax. If yes, then it can be claimed as deduction. Suppose bonus and commission is due. Is it allowed as deduction? The answer is no. If it is due, it is not allowed as deduction. If it is paid, then yes, it is allowed as deduction. Right? Very good. Now let's come to fifth point, that is interest on loan. Please concentrate because this is so lengthy. We'll try to understand each and every point, and I feel it is very easy also. Lengthy but easy to understand. Okay. Now let's come to interest on loan. What do you understand by interest on loan? You are doing business. So for doing the business, you may need some loan. So what you did, you took some loan and you are paying interest on it. That is interest on loan here. Is it allowed as deduction? For that, they said 3 conditions. First thing, you should have taken the loan. Second condition, the loan must be taken for business purpose. And third condition, on that, interest must be accrued. So if you have taken the loan for business on which interest is accrued, then definitely you can actually claim the deduction. Come on, concentrate and try to understand what I am saying. Right? We are talking about interest on loan. We are talking about interest on loan basically. Okay. Now, interest on loan, what are the conditions? First condition is the loan must be taken. So if you are a businessman, you should take the loan. For what? Business purpose. Right? You want to purchase some capital equipment. You want to manage operations for some time. Right? You want to invest in research and development. So it must be relating to business. And third one, you should have incurred interest on it. Whether it is due or paid doesn't matter. But you should incur that interest. That's the condition. Okay. If you satisfy these 3 conditions, then definitely interest is allowed. But there is a lot to discuss because this is a major expenditure. So around 12 different analytical points are there, which I am going to share with you. Listen and enjoy the concept. Okay. First point. Now, I am doing business. I am a sole proprietor. Okay. I am doing business. I am a sole proprietor. I am giving loan to my business and I am charging interest to my business. I am collecting interest from my business. Now, is it allowed as deduction for business? What is the law? Law says sole proprietorship and business are one and the same. So, can you earn income from yourself? The answer is no. So, that's why interest paid to sole proprietor is not allowed as deduction. So, what is the requirement? There should be some lender and somebody who is going to take the loan. There should be some creditor, there should be some debtor. So, these are 2 different entities, right? Then only interest element actually comes into picture. If it is single entity, then there is no such concept of deduction of interest. Like sole proprietor giving loan to his business and then charging interest, then business want to claim the deduction of interest, not allowed. Because there are no other person here. Okay. Now, but in partnership, this works. Why? Because in income tax language, partnership firm is an independent entity. Now, if you register your partnership, you will get a PAN number in the name of firm. Right? Once your partnership is registered, you will get a PAN number in the name of the firm. So when there is a PAN number, partnership is a different entity. Partner is a different entity. Okay. Now, if partner gives loan to the firm, because there are multiple partners in the firm. So if individual partner gives any loan to the firm, they say that okay, the firm paying interest can claim the deduction. So if partnership firm pays any interest to the partner, that is allowed as deduction. Similarly, like we discussed in section 30 also, if you remember, if partner is given property on rent to the firm, that rent also is an expenditure for business and they can claim deduction. And for partner, it becomes income from house property. Okay, we discussed this. Similarly, when we talk about partner giving loan to the firm, then in that case, partner is giving loan to the firm. For partner, it is income. And for the firm, it is expenditure. And definitely partnership firm is an independent entity under income tax only. It can claim deduction. Okay, come to the second point. Now think about a organization has multiple departments. One department gave loan to another department. What I said, one department gave loan to another department. Tell me, they charged interest also. In departmental accounts, they showed interest earned and they also showed interest paid by respective departments. Now, under income tax, can we consider this as income to the earner and expenditure to the payer? The answer is organization is one. Organization has one PAN number, correct? And under that organization, there are multiple departments. Okay, so it is all notional income. It is not real income. If you keep money from your one pocket and put that money into another pocket, is it income? So for the organization, from one department to another department is like putting the money from one pocket to another. So that's why it is not an income. Neither it is an expenditure for the organization. Okay, so can such interest be claimed as deduction? The answer is no. Can such interest earned by a department be shown as income under other sources? The answer is no. Okay, this way you should be able to remember. Now, let's come to a relative concept. Suppose you have started a small business. Now you went to your relatives and asked for some loan. Ki, I want loan, please give me loan so that I can develop the business. Relatives said, okay, we'll give the loan. They gave the loan, you took the loan, you started doing business, and you also paid interest to the relatives. Can you claim this interest as deduction? The Income Tax Act says, yes, if you pay interest to relatives, it is allowed as deduction. But then, because it's a relative, please be careful. Is the interest paid reasonable or you paid more interest? If it is reasonable, no problem at all. Okay. If you paid excess interest more than the market rate, then definitely that excess interest may be disallowed by the assessing officer. Now, you did not understand. I know. I'm here to make things easy for you. Generally, interest is deductible, correct? When you compute income, you debit the interest, correct? Now, when I said disallowed, that much extra interest cannot be debited, cannot be deducted. That's what I wanted to tell. Okay, very good. Now you understood this part also. So when it comes to relatives, can we take a loan? Can we pay interest? The answer is yes. Is it allowed under section 36? Yes. But how much it is allowed? If it is on par with market, allowed. Beyond market, extra cannot be deducted. Okay, we use the word disallowed under income tax. Now, when income tax officer, the assessing officer, was checking your income tax returns, and he said, actually, there is no need for this loan. Why you are showing interest on this loan? This loan was not required for your business, right? You are unnecessarily showing this interest to avoid the tax. Like that, assessing officer contended. This loan was not needed, he is telling. So that's why he will not give deduction of interest. He challenged. Now you are sitting as a CMA in front of that commissioner. What will you say? You will say that, sir, first thing, I took the loan. Second thing, I took the loan for business. Third thing, I incurred interest on it. That's it. I met the conditions under section 36. Now, whether it is needed or not is, as a businessman, my discretion to decide. You are none to decide. So, in this case, you don't have a point to present. Sorry, sir, please excuse. And assessing officer, commissioner will have no words to say, because their duty is to ensure that you comply with law. As long as you comply with law, they don't have the right to challenge you. Right? You would have heard so many news that earlier people were to avoid lot of taxes. So whenever income tax department or GST department people were to go, they were to have lot of fear. Ma kya ho jata? But now they are all legally paying taxes, completely paying taxes. Now if GST commissioners come with with arrogance, the businessmen are talking. Why did you come? We are complying. What is the hell you are doing here? Right? So they are very shrewd now, because they don't have anything to hide. Hide. Right? They are clear, they are complete in their records. Okay? This is the advantage. Now, what did we learn? We learned about, first thing, interest. In interest, different cases we covered. Let's come to the next interest concept. Company issues share capital. Okay? Company issues share capital. On that, company is paying interest to you. Now, on share capital, interest should be paid or dividend should be paid? Obviously, dividend should be paid, correct? Right. So, if the company is paying interest on share capital, is it allowed as deduction? The answer is no. Interest on share capital by the company cannot be paid, and that's why if they pay also, even if you receive, it's okay for you, it's income for you. But for company, can they show it as deduction? Can they deduct interest on share capital while computing business income? The answer is no. They cannot deduct interest on share capital. Who cannot deduct? Company. Right? Sometimes we take the loan to purchase a fixed asset. Then what to do with it? So if you have taken the loan to purchase the fixed asset, maybe sometimes to construct the fixed asset also, then what to do? Any interest paid up to the date of purchase of the asset or up to the date of putting the asset to use. So any interest paid up to the date of purchase of asset or putting the asset to use, that you have to remember that it is added to the cost of the asset. It is added to the cost of the asset. Okay? And what about interest after that? Now you have started using the asset. Now after that you are paying some interest because loan is not paid till now. So what about that interest after putting the asset to use? It is treated as business expenditure and claimed as deduction under section 36. So under this section itself, you will get the deduction. Okay, very good. Now, suppose you took a loan for your business, but you used the loan money partly for business and partly for your personal purpose. Now tell me what to do. Can you deduct entire interest paid? The answer is no. You can deduct only that portion of interest which is pertaining to business. If it is pertaining to business, deduct it. If it is not pertaining to business, you cannot deduct it. So interest on loan, whatever you have taken, which is pertaining to business, that is allowed as deduction. Okay, very good. Now, sometimes people take loan to pay income tax. Now, if somebody has taken loan to pay income tax, on that loan they are paying again interest, is that interest allowed as deduction? The answer is no. Any interest on loan taken to pay income tax not allowed as deduction. Okay, any interest on loan taken to pay income tax, such interest is not deductible. But suppose if it is GST component, if it is customs duty, if it is excise duty on alcoholic liquor, right? So such type of taxes are there. Or I can say indirect taxes I am talking about. If you have taken loan to pay indirect tax, that is the interest on it will be allowed as deduction. So if you have taken the loan to pay indirect tax, interest on that portion is allowed as deduction. Clear to all of you? Very good. Now, you did not find anybody who can give loan in India. So you went to foreign country. You took some loan there and now you are paying interest outside India. Now, if you are paying interest outside India, then you have to deduct tax and deposit that tax with the government, right? Suppose 10% is the rate of TDS. Then you are paying suppose 1 lakh rupees outside India as interest. Okay. So 10,000 you should deduct, pay 90,000 outside India and 10,000 you should pay to government in the name of tax. Okay. In the name of, we can say TDS, tax deducted at source. Now, if you don't do so, then your entire 1 lakh expenditure is there now. That is not allowed as deduction. So what are the conditions? Conditions are you should deduct the tax and second one, deposit the tax with the government. If you satisfy these two conditions, then interest paid outside India is also allowed as deduction. But it is strict, you have to follow the conditions. Now, let's go to the next point. Capital versus revenue. Now, after taking the loan, you use the loan for revenue purpose, maybe business operations, or capital purpose, maybe constructing a building, purchasing a new plant and machinery. Doesn't matter. Is the loan taken for the purpose of uses? Is it used in the business? The usage may be for operational purpose, that is revenue, or infrastructure purpose, capital purpose, that may be capital. Both are fine. So the purpose may be revenue or capital, doesn't matter. But did you take the loan for business? Are you incurring the interest expenditure? That's it. You can claim deduction of interest. Sometimes what happens, if I want to become a partner in a firm, but I don't have so much money to even contribute to the capital. So I took loan and then that loan money I kept it as capital. In that case, whatever interest I am paying on the loan in my personal income tax return, I can claim it as deduction. Because I am paying interest for what? For investment. Right? That investment income is taxable and interest is deductible. Okay. Similarly, brokerage, commission, both are not allowed as deduction under section 36. Right? These are not allowed as deduction under section 36. But these are allowed as deduction. The brokerage, the commission to take the loan. Now you will not get loan directly if you go to bank. Sometimes you have to hire some agency. Right? We call them as brokers. They'll prepare your project report for the loan. Right? They'll have some nexus to negotiate with the banks. Right? They will check your financial statements, give you guidance for 6 months to 1 year to correct all the financial statements. so that your loan application becomes eligible. So all these services these people give, they are called as brokers and they charge commission. The commission paid cannot be deducted here as interest expenditure under section 36. But under section 37, as general deduction, they can claim it. Okay. So that brokerage paid, commission paid is general expenditure. Now, let us go to the next topic. And if suppose you are paying interest, but that interest is not relating to loan. Suppose you delayed in paying electricity bill. So the electricity department charged interest on the delayed payment. Suppose you are delaying in payment to suppliers. The supplier said, let us charge some interest on the delayed period. So in that case, whatever you are paying interest to supplier, you are paying interest on the electricity bill, that is allowed as deduction, but not here, not under section 36. Then where it should be deducted? It should be deductible under section 37. It is treated as deduction under section 37. It is treated as deduction. Which deduction? General deduction under section 37. Right? Interest on loan, so big concept which we discussed, correct? Let me recap for all of you. Hey, can sole proprietor claim interest deduction for the loan he gave it to business? No. Partner giving loan to firm? Yes. Partner giving loan, firm can claim deduction. Within department, interdepartmental loans, interest is not allowed as deduction. If you pay to relatives any interest, it is allowed as deduction, but if it is as per the market, more than market rate cannot be deducted. Right? Whether the loan is needed or not, it is not assessing officer's problem. Businessman only can decide all this. Okay? Assessing officer cannot say that the loan was not needed, so will not allow the deduction of interest. Assessing officer cannot say like this. He only have to check that is the loan taken, is it used for business, and is interest accrued. If it is done, that's it. Okay, next. We understood all this, but can a company pay interest on share capital? Company may pay or may not, but if the company pays, it cannot claim the interest on share capital as deduction. Okay. Now, when we purchase an asset by taking a loan, interest paid up to the date of purchase of asset or putting the asset to use, that's allowed as deduction. No, it is added to the cost of the asset. But any interest paid after the asset is put to use, that is allowed as deduction under section 36. Up to the date of putting the asset to use, it is a capital expenditure we should assume and add to the cost of the asset. Such interest should be added to the cost of the asset. And interest paid after the asset is put to use is a revenue item and deductible under section 36. We discussed all this. You remember? Yes. If it is partly personal, partly business, then business portion of interest allowed as deduction. Interest on loan taken to pay income tax, not allowed. But if interest is paid on the loan taken to pay GST, to pay customs duty, to pay excise duty on alcoholic products or tobacco products, then obviously such interest is allowed as deduction. So only income tax law, they restrict. No deduction is allowed. But indirect tax law, they say if you are paying interest on loan to pay taxes, which are indirect taxes, no problem, interest is deductible. Then if you take the loan from foreign country, deduct tax, deposit with government, then claim the entire interest as deduction. If you fail, then you cannot deduct the interest. It may be used for revenue or capital, no problem at all. And we discussed that if partner took the loan to invest as capital, then he can claim the interest paid as deduction. And if interest is paid for some other purpose, not on the borrowed loan, but as a penalty, like because of delay in electricity bill payment, then definitely such interest is not allowed here as deduction, but under section 37 it can be claimed. Then next comes to the topic zero coupon bonds. That means discount on zero coupon bonds we are going to discuss. Now, generally, when you actually invest in some debentures, I'll just ask you a simple question. Tell me, if you invest money into debentures, every year you will get interest, yes or no? Every year you will get interest. Correct? Am I right or wrong? Yes. Every year you should get interest. But when I talk about zero coupon bonds, you will not get interest during the tenure of the bond. Then when will we get the amount? At the time of maturity, right? So how it works, I'll tell you. If suppose bond is issued for 80 rupees and its maturity is for 3 years, and after 3 years they will pay you 80 rupees plus interest, almost let's assume 100 rupees it is. So on maturity you will get 100 rupees. Now tell me, what is the interest income earned? This discount is interest only, correct? You purchased for discounted price, that is 80 rupees, and you paid the full price, that is 100 rupees. So this discount on zero coupon bonds is an interest income. Okay, interest income to the person who purchases. But for the infrastructure capital fund, for the infrastructure capital company, or for the public sector company who issue this type of zero coupon bonds, I said infrastructure capital company, infrastructure capital fund, the public sector company who issue these zero coupon bonds. For them, interest is an expenditure. For them, interest is an expenditure. But when to show this expenditure? This 80 rupees, 100 rupees difference is 20. But when to show this 20 rupees as an expenditure? The answer is on proportionate basis. Right? On proportionate basis, they should deduct the interest. Every year they can deduct, no problem. But how? We have to calculate proportion and accordingly we should do. Right? Clear to all of you? Very good. Shall we go to next topic? We understood zero coupon bonds. Proportionate basis means we have to create ratio based on number of months the zero coupon bond is held in the previous year. Right? During whole years for which the bond is issued. Then whatever interest is there, divided by months, okay, divided by number of months it was held for the whole period, right? Then you will get interest per month into number of months the bond was held in the previous year. Okay, this way if you do the computation, you will completely understand the topic. Okay, great. So please remember, when it comes to zero coupon bonds, what the rule? Rule is simple. You should see the difference between issue price and redemption price. Issue price is 80 here, redemption price is 100 here. Difference is 20. Now how many months this bond was held? Suppose it was held for 36 months. So 20 divided by 36 we should do. Whatever number comes, that is interest per month, into number of months it was held in previous year. This way you do, that's it. Now, contribution to recognized provident fund. We are talking about contribution to recognized provident fund or superannuation fund. So who is contributing? Employer is contributing. Up to how much percentage? In recognized provident fund, it is 12% per annum of the salary, right? So any contribution by employer to recognized provident fund or to approved superannuation fund that can be claimed as deduction here. But here when we are talking about employer's share of contribution, right? Because in this type of funds, employer also contribute, employee also contributes, correct? So when we are talking about here, we are talking about employer's contribution to recognized provident fund, right? That is allowed as deduction. To superannuation fund, that is also allowed as deduction. But suppose if it is unrecognized provident fund, then it is not allowed as deduction. Employer's contribution is not taxable at the time of contribution. So when it comes to unrecognized provident fund, it is not taxable at the time of contribution. When it comes to recognized provident fund, employer's contribution is taxed at the time of contribution and further deductions can also be claimed. Okay. What about statutory provident fund? The answer is it is government provident fund. So here we will not give deduction. But under section 37 we can give deduction. No problem at all. Okay. Similar to this concept is NPS, National Pension Scheme. So here it is a new scheme where people can invest money for their retirement. Right? In that case, up to 14% of the salary. Up to how much? 14% of the salary. Who will contribute? Employer will contribute. And that will be allowed as deduction under section 36. Okay. I'll tell you 14% of salary. Salary means what? Salary means basic pay plus DA retirement only. No other item. No allowances, no perquisite. Only basic pay plus DA should be taken. And whatever salary comes into 14%. Who should contribute? Employer contributes if he has taken NPS in his company. Right? Is it allowed as deduction? Yes, under section 36, it is allowed as deduction. Now, what we discussed till now, we discussed about recognized provident fund, superannuation fund, then we discussed NPS, new pension scheme, national pension scheme, such type of words we actually use to understand the topic. And employer's contribution, what I said, 14%, up to 14% of basic pay plus DA retirement, he can contribute. And whatever employer contributes, he claims deduction under section 36. He claims deduction under section 36. Deduction is allowed here. Okay. Now, let us come to provision for gratuity. What I said, provision for gratuity. So if suppose we are talking about gratuity, every year employer contributes some portion so that when the employee retires, that lump sum can be given to the employee. This we can call it as provision for gratuity. Now, when the employee retires, at that time suddenly lump sum amount cannot be brought by employer, correct? So that's why every year they contribute to a fund and we call it as provision for gratuity. Is it allowed? The answer is yes, it is allowed as deduction. Let's continue with the next point. We discussed about provision for gratuity. Is it allowed as deduction? Yes, it is allowed as deduction. We just now discussed about the recognized provident fund also. But when should the employer contribute to recognized provident fund? The answer is very simple. It is actually 15th of the next month. So every month salary is paid na? That next month's 15th employer should contribute. If the employer don't actually contribute within the due date, then he will not be able to claim deduction. So that's why employer should contribute to recognized provident fund obviously on time. If he contributes to superannuation fund, he can claim deduction still. If he contributes to something called a new pension scheme, employer will get deduction up to 14% of salary. If he contributes to provision for gratuity, yes, he can claim the deduction. This way you should be able to understand the topics. Now, let us go to the next topic. We discussed about staff welfare scheme. Now we are going to discuss, correct? Now here what happens, in the name of staff welfare, employee also has to contribute something. Employee also has to contribute something, right? So employee contributes, that means from employee's salary, the employer keeps the money for whether it is superannuation fund, whether it is a recognized provident fund, whether it is NPS. From employee's salary, employers cuts that portion which employee has to contribute, and he'll keep with himself. Till the time the employer keep the money with him, it is treated as his income. And once the employer, right, once the employer deposits the money with the respective authorities, with the respective trusts, then he can claim the deduction. Mostly what happens in practice, I'll tell you. There are due dates for each law. If it is deposited within due date, then that's it. Neither to treat it as income nor to treat it as expenditure. Are you able to understand? But if it is deposited not within time, delay, then when it is deposited, it is treated as income. And when he deducts it from the employee's account, it is treated as income. And the time when he deposits, it is treated as expenditure and deducted. Just we'll have a pause for a minute or two and then we'll continue the lecture. Okay. So before the break, what I was telling you, that contribution to the staff welfare fund. Actually, let me just tell you again, what does this mean? What happens is, to any of the funds for retirement benefits, there are two contributions. One is employer contribution, which I just discussed in these points, right, before. And second one is employee's contribution. So whenever employee contributes to recognized provident fund, to superannuation fund, to NPS, right, or any other retirement benefit. So first, employee will not contribute directly to the fund. Actually, what happens is, employer will deduct employee's contribution from the employee's salary. So suppose employee has to get 1 lakh rupees per month salary and his NPS contribution is 10%. So what happens? Employee will not get entire 1 lakh. Employee will get 90,000 and 10,000 will be NPS contribution. Now who will keep this employee's contribution to NPS? Will be with employer. When that money is with employer, that is employer's income. And when employer deposits it with the trust, central trust is there for NPS, right, or to the fund managers, he'll deposit, then the employer will get the deduction. So when it is deducted from employee's salary, it is income for the employer keeps it, and when employer deposits, he gets the deduction. Okay, this you should be able to understand. Now, loss due to animals. Generally, when we discussed about block of assets under section 2 clause 11, we discussed about tangible assets, we discussed about intangible assets. But did we say that livestock is also a depreciable asset? The answer is no. Livestock is used in the business. Suppose if it is a dairy business, then definitely livestock is used. Even in farming, agriculture, livestock is used. So, livestock is nothing but animals. Okay? Now, you cannot claim depreciation for the animal throughout the life of the animal. But when the animal dies, right? So, whatever the sale price of the flesh or whatever, minus we can compare it with cost of purchase, the difference is treated as loss. You purchased the animal for 1 lakh rupees and you took the service of the animal for around 5 years, 7 years. But after 7 years, the animal died. When you sold the flesh, you got suppose 5,000. Now 1 lakh was the purchase price, 5,000 is the sale. What is the difference? 95,000. So 95,000 you can claim it as deduction here. Okay, under section 36 you can claim the difference of purchase price and sale price, right? Are you able to understand? Yes. Of course, the sale price will not be more because it is a dead animal. Okay. So that's why I said comparison. Okay. So whatever excess you paid, excess you expended, that is allowed as deduction here. Now, let us talk about bad debts. When you do business, you give credit to customers, correct? You will sell goods on credit to customers. The customers most of the time will pay the money to you, maybe on time or little late. But there may be some customers who don't pay at all. 1 year over, 2 years over, they did not pay. Now, how long you will keep their data as debtors in your books of accounts, in your balance sheet? Because you are anyhow not going to receive it, correct? So, such debtors who became bad, who did not pay you the money, we have to create bad debts and debit it to P&L account. Same story in income tax also. So we can create bad debts and deduct it while computing your business income. But accounting, the law is little simple. Accounting rules are very simple. But in income tax, you have to satisfy certain conditions. First condition, the first condition, the debt should be incidental to the business, or the debt should be incidental to the ordinary course of the business. Like example, if suppose a bank gives the loan and the loan is bad, that means the customer did not pay, then definitely bank will claim it as bad debts, and for bank it is in the ordinary course of business. For a trader who is trading in goods and he gives goods on credit to customers, for him giving credits, sometimes suffering from bad debts, is in the ordinary course of business. Okay, so in that situation, what happens? Please remember, it should be in the ordinary course of business. Then definitely the trader can claim deduction of bad debts. But suppose a lawyer is there. Lawyer gave loan to client for purchase of property, but the client defaulted the money. He did not pay back to the lawyer. In that case, lawyer want to claim bad debts as deduction. Can he claim? The answer is no, because lawyer's business is not giving loans, correct? Is it in his ordinary course of business? Giving loan is not ordinary for lawyer. It's not normal business for lawyer. So that's why he cannot claim the deduction of bad debts. Now to call it as bad debts, first it should have been treated as income. Then later on, if it is not received, we call it as bad debts. Now I'll tell you. Let's take the example of the same trader. Trader, when he sells the goods, what he will write the entry? Debtors account debit to credit sales. Correct? Yes or no? And this credit sales will go to the P&L account and they will tell buy credit sales. You may say trading account also, I do understand. But in corporate accounting practices, there is no trading account. That's why I said statement of profit and loss here, P&L account, whatever. Right? So there what we'll write? We'll write sales as income. Now, that means the second condition is satisfied. Second condition says to call it as bad debts, the same amount should have been shown as income in the current previous year or in the earlier previous years. We showed it as credit sales. Later on, the debtor did not pay. So we want to take it as bad debts and deduct it. Can we do so? The answer is yes. But suppose we paid advance to the supplier. We paid advance to the supplier. Now we were not able to pay the balance money. So the supplier forfeited the amount. He said your advance is cancelled. You will not get the money back. Now in this case, whatever the amount is forfeited, can I show it as bad debts? Amount is lost, correct? Here also, amount is lost. So can I show it as bad debts? The answer is no, because it should be treated as income first. And here we paid advance to supplier is not shown as income. So that's why we cannot call it as bad debts under section 36. Of course, you can show it under section 37 as deduction. Okay, but here we cannot call it as bad debts if supplier forfeited the advance. So what did we learn? 2 points. First, the debt should be in the ordinary course of business. Right? Second point, it should have been treated as income in the previous year or earlier previous years. Then you tried to recover the money, but he did not pay. So we'll write it off as bad. We'll write it off as bad. So bad debts written off. When we write it off bad, then only we can deduct it as expenditure. Okay. And then this should happen in the previous year. And only revenue losses should be claimed as deduction. Okay. If it is suppose supply of goods, the customer did not pay, then show bad debts, no problem. But suppose if it is a capital asset, relating to that there is a payment default, you cannot call it as bad debts. So to call it as bad debts under income tax, it should be revenue in nature. That you should be able to remember. Now, we completed so many points, correct? Now, let's go to the 13th point. We are talking about family planning expenditure. So bad debts is clear to all of you, right? I tried to explain in so much of depth. I feel you understood. Hey, please remember what I spoke about bad debts. I spoke that bad debts means we gave some credit sales to the customer. He did not pay the money. So we'll call it as bad debts. We tried to reasonably recover, but he did not pay. So we treated it as bad debts. It is a sheer option of the assessee to decide when it is bad debts. It is his policy to decide when to treat it as bad debts. Correct? And to create it as bad debt in income tax, there are conditions. First, it should be incidental to business. Second, should be earlier treated as income. Third, it should be written off as bad in the previous year. That's the fourth point. And it should be revenue, not capital receipt or capital loss, which can be treated as bad here. Now, What we do with bad debts? Tell me. Income 2841. Correct? These two sections. From that we will deduct lot of expenditures which are mentioned under section 30 to 37. Similarly, we'll deduct it as bad debts. Okay, whatever bad debts are there, we'll deduct it here. Okay, one more question I'll tell you. Now, later on, the customer became great. He came back to you and he repaid your money. Right? So, the bad debts is recovered, correct? So, recovery of bad debts, what we have to do? Because when bad debts is incurred, you claimed it as deduction. Now, when it is later on recovered, it should be treated as income under section 41. I said, na, section 41 talks about deemed incomes, right? So, bad debts recovered is a income under section 47, 41. Okay. Bad debts recovered is section 41. Now, to claim bad debts, your business should continue. If you stop the business, can you actually claim bad debts? The answer is no. Your business should continue. That's the condition. Okay? Then only you can claim it as bad debt. For discontinued business, there cannot be any bad debts. Okay? Very good. If bad debts is recovered later on also, after your closure of business, you recover the bad debts. Still, it is treated as income under section 47, 41. Right? Sometimes what happens? Father wrote it as bad debts. He transferred the business to son. Now the successor, we can use the word, and son recovered the money. Is it an income to son under section 41? The answer is yes. If it is bad debts recovered, it is income under section 41. So many concepts I would have missed. I just forgot and then recollected. Chalo, koi baat nahi. Let's continue with the next topic, and that is family planning expenditure. Now, this deduction is allowed only to companies. So, is it allowed to sole proprietorship? The answer is no. Is it allowed to companies? The answer is yes. Under section 36, it is allowed to companies only. Other SSCs, no deduction. So, when we talk about family planning expenditure, please remember, in section 36, only deduction is given for companies. Okay. If it is revenue expenditure, 100% deduction. Whatever expenditure incurred in the current year, that is allowed as deduction. This is revenue expenditure. Okay. But capital expenditure is allowed as deduction in 5 equal installments. Capital expenditure is allowed, right? Suppose for family planning expenditure, a small hospital is set up in the employer's premises itself. Then obviously it is a capital expenditure. So it can be deducted in 5 equal installments. That you should remember. Okay? Right. But suppose example, you try to deduct family planning expenditure, but the profits of the organization, the business income is not sufficient. What to do? If business income is not sufficient, what to do? Then you have to carry forward that expenditure to claim it in the next year. So next year, whenever we earn income, from that we will deduct this unabsorbed capital expenditure or unabsorbed family planning expenditure. We can deduct later on also. Now I'll tell you, it is same as your what I forgot. Okay, same as your unabsorbed depreciation. This is right word. Same as unabsorbed depreciation. So whether it is unabsorbed depreciation, whether it is unabsorbed scientific research expenditure, whether it is unabsorbed family planning expenditure, all are treated alike. For how many years it would be claimed? It can be claimed for unlimited number of years. There is no limit on the period. Okay. Second thing, what I wanted to tell you, that it can be carried forward for unlimited period. It can be adjusted from any head except salary and casual income. What I said for unabsorbed depreciation, same I said for scientific research expenditure which is unabsorbed, and same I am telling for family planning expenditure which is unabsorbed. Okay, this comparative study you should be able to do. Now when you solve the problems, sometimes the employer may be sole proprietor and he writes family planning expenditure. Okay, sole proprietor is the employer and he writes family planning expenditure for the employees. In that case, revenue expenditure is allowed as deduction under section 37, not here. Here only for company, under section 36 only for companies. Revenue 100%, capital expenditure in 5 equal installments. But for other SSE, revenue expenditure is allowed as deduction under section 37. But capital expenditure for other SSEs not allowed. For other SSEs, capital expenditure not allowed. This way you should be able to understand. Now, securities transaction tax and commodities transaction tax. Whenever we trade on a stock exchange or commodity exchange, we pay a small portion of the transaction fee as tax so that the exchange can be managed properly. So these securities transaction tax, these commodities transaction tax are allowed as deduction. Right? And last thing I'll tell you in section 36, that is loss due to ICDS. Now here they simply said mark to market losses. They are allowed as deduction. What they are telling? Loss due to ICDS. ICDS says mark to market losses. They are claimed it as deduction. They are allowed, they said. Right? From your exams, you can ignore this. But still, if a fill in the blank comes, mark to market losses as per ICDS 1, is it allowed as deduction? And you will say yes as the answer. That's it. Okay? Right. Now let's come to section 37. So we discussed so many things in 36, 37, 38, only 2 sections left. Concentrate. What they said? 37 says that are you incurring an expenditure? Listen carefully. Are you incurring an expenditure? Yes. Is it for the purpose of business? The answer is yes. Is it not covered under section 30 to 36? So it is incurred for the purpose of business, not covered under section 30 to 36. It is neither personal in nature nor capital in nature. Neither personal nor capital. Okay. So if it is neither personal nor capital, it's revenue expenditure incurred in the previous year, it is lawful, then definitely deduction is claimed. So when I say lawful, it should not be illegal as per any law in the country. Like example, if you spend money to purchase drugs, it is prohibited as per Narcotics Control Bureau. So there is a department which prohibits. Then supply of drugs become illegal. Its expenditure also you cannot claim. Are you able to understand? Right? So it should be lawful. Any offenses which are compounded, like example, oh, right. Offenses which are compounded, like penalties which are there under the income tax law. Is it allowed as deduction? The answer is no. Right? So please remember this way. So if it is a criminal law related punishment, and then if you have incurred such type of losses, that is not allowed as deduction. Now, section 37, when I am talking about, I said that first thing is the expenditure relating to business. Is it not covered under section 30 to 36? Is it not a personal expenditure, not a capital expenditure? Is it incurred in the previous year? Is it lawful? If the answer is yes, then definitely any expenditure can be allowed as deduction. Like in your P&L account, you see there are so many expenditures. Like your salaries to staff is there, correct? Salaries to staff may be there, printing and stationery may be there, audit fees will be there, advertisement expenditure may be there, sales promotion expenditure may be there, right? Office miscellaneous expenditures may be there. So what are all these? These are general deductions under section 37. So if these general deductions are list you try to remember, that would be great, because any expenditure can be claimed if it is for the business and not covered under section 30 to 36 and is lawful. Then nobody can stop you from claiming the deduction, right? But please remember that there are something like CSR activities. Now if you are making CSR payment, it cannot be deducted. CSR itself means corporate social responsibility, correct? So if you pay anything to any organization in the name of CSR, not allowed as deduction. Clear? Very good. Shall we go to next part? So CSR related payments, you cannot claim it as deduction. Then most of the times you would have heard that doctors recommend lot of medicines, because pharmacy companies push the doctors to sell medicines. Even surgeries are sold. Fake surgeries are done. For what purpose? Only because they have to meet the targets of the hospital, targets of the pharmacy industry. And it is becoming worse than worst every day. Why? Because pharmacy companies give lot of benefits to doctors. Doctors get Thailand trip for free from pharmacy companies, right? Doctors get a lot of medicine samples as free. Medicine samples are still okay. Doctors get laptop as gift, mobile phone as gift, washing machine, fridge, many things they get. A foreign trip or any other place trip, all these things they get from pharmacy companies. What government is saying, that pharmacy company cannot claim this type of expenditure as deduction, because under the medicine laws, medicine related laws are there, no? This type of promotion is not entertained. So that's why if doctors get anything, the pharmacy company cannot claim it as deduction. But what about the doctors? Okay, the business cannot claim it as deduction. What about the doctors? Whatever money they received, that is a taxable income for the doctors. Right? For the pharmacy company, no deduction. For doctors, the amount received is taxable. This is how you should remember. Okay. Clear? Very good. Now we try to cover section 37 in depth. Correct? 37 we covered in depth. Printing, stationery, salaries, correct? General expenses, miscellaneous expenses, tea and snacks in the office. Like that, so many expenditures, audit fees is there, director's remuneration are there, like sitting fees of director. So it's a business expenditure only, no? That can be claimed because it is revenue in nature, because it is for the purpose of business in the previous year. Are you able to understand? Okay, right. But CSR expenditure not allowed. Family planning expenditure, sorry. Pharmacy companies giving bribe to doctors actually, which is not allowed. Okay, very good. So this way you should be able to understand all the points which I am telling. Shall we go to the next part? Hey, you want to do advertisement in political party souvenirs? You can do, and you will get reach also. Many people read. But you cannot claim as deduction under section 37. So if any advertisement expenditure is incurred, for advertisement in souvenirs of the political parties, then that is not allowed as deduction. Clear? Under section 37. But if you think there is a section called as 80 GGB, GGC, under this section deduction can be claimed by the contributors. But under section 37, no deduction for advertisement in political party souvenir. Okay, but under 80 GGB, GGC, definitely the deduction is allowed. Easy? Yes. So under 37, for political party we do advertisement of our company's business in political parties in souvenir, that is not deductible under section 37, but deductible under section 80 GGB, GGC. Okay. Now let's come to the last part, and I already taught this to you. If suppose part of the expenditure is for personal and part of the expenditure is for business, then section 38 says proportionate deduction. So only expenditure pertaining to business portion will be allowed as deduction. Expenditure pertaining to business portion will be allowed as deduction. Expenditure pertaining to personal portion not allowed as deduction. So expenditure pertaining to business allowed. Yeah. Personal not allowed. That's what section 38 talks about. So like this, we tried to cover so many concepts in this video. Hope you enjoyed this video, and we'll solve so many problems on the concepts which we discussed, right, in the next videos.